Alright, today is Monday, September 21st, and this is a post-market review for the stock market activities today. Here is the agenda of the day, and we had plenty of activities to cover today. Most investors and traders are looking for clarity, and you have come to the right place because I will explain to you what happened today and whether the quote-unquote bounce that we saw in the market today and the rotation back to the stay-at-home / technology / momentum trade will last or not. We also have important headlines to cover: the tensions with China, the whole TikTok deal, and of course the Nikola saga that is getting more interesting by the day. And of course, overnight we heard in Europe the FinCEN revelations about the banking industry. I have information and details about that. And we'll also talk about Propaganda Minister Larry Kudlow and the statements he made today. And of course, you need to pay attention to the coverage of the heat map and the rotation trade today, because I will discuss my personal strategy here, what I did on Friday and what I did today. And of course, we do have charts of the SPY, the Qs, the VIX, the dollar index. We have interesting notes about that. Lastly, we will conclude the video with an important message. And the message title is "There is nowhere to hide." And with that positive note, let's check on the indices. That Dow Industrial Average closing in the red, minus 509.72 points, or a decline of 1.84%. The Nasdaq closing in the red, however making a massive comeback, declining only 14.48 points or 0.13%. What about the S&P 500 in the red, minus 38.41 points or a decline of 1.16%. And of course, notable the closing of the European markets overnight. The German DAX got whacked completely, closing under 4%. We will see if the European markets are going to rebound overnight, taking a hint of what the United States markets did today. And here is the sector's performance. No medals today. Not a single sector deserve any medal. Even technology that managed to close in the green today, because we don't give medals to dead cat bounces. And leading the decliners, look at this, materials. Materials have been outperforming as of late, and today got whacked, of course, because we have reverted back to the trade we had 3 months ago. We will visit that and talk about it in details. Real estate declining today, and industrials, of course, among the three sectors leading the decline. What about the futures market? It is a sea of red. Grains down, metals down, softs down, and you saw weakness specifically in silver, in copper, and you saw coffee, coca, OJ, sugar, everything is down. And of course, in meats, we saw lean hogs closing in the red. However, we're getting news about the shortage of pork supply in China. So the dips in lean hogs could be an opportunity to buy, specifically giving the shortage of supply from Germany and Brazil. And now, moving on to the big casino, to the options market. The tables were a little hot today, specifically with Apple and Tesla per usual. Apple closing at number 1, 2.1 million options traded today, 66.3 of those were for calls. Tesla with 750,000 options traded here, 68% of those were calls. It shows a little bit of weakness in Tesla, showing basically that the cult followers of Tesla are already in. They don't have any money left to buy calls or any new shares. They're all in, they're waiting for Reverend Elon, and of course Reverend Elon disappointed them after the market, tweeting and tampering expectations for tomorrow's event. At number 3, another fraud company, Nikola, 400,000 options traded today, 35% of those were calls. The problem with the option traders and Nikola is that option traders become too extreme. In the negative side here, they're buying the $5 put and the $1 put. They're basically betting that the company is going down to zero very soon. That might be the case. However, when you do that in the short term, you are preparing a recipe for massive short covering rallies. Any news from GM? Any statements from a neutral actor here saying that Nikola might have some assets worthy of value that will force short covering? My take, stay the hell away from Nikola stock and options. There are better opportunities out there. Of course, we didn't see any interesting trades regarding the open interest. I haven't seen anything that caught my attention. If you watched yesterday's video, I saw 2 trades on Friday that caught my attention and saved my ass today. One for Marriott and another one for Freeport McMoRan. 2 names that I own in my portfolio and were down massively today. But of course, due to the clue I got on Friday, I managed to buy puts and sell puts lower than the strike price that I bought. And this strategy so far protected me from the downside in Marriott and Freeport today. This is why it is important to scour through the options market and see what people are seeing ahead of time. I wish I bought more puts to protect the rest of the names in my portfolio, but that is a different story. We'll talk about that in details when we go and discuss the rotation trade. And now moving on to the headlines that shaped the day. Starting of course with the tension between the United States and China. The US of course sent an envoy to Taiwan. China responded by exercising military drills and sending fighter jets in the Taiwan Strait. Taiwan responded and they said that they will respond militarily if China practice any aggression on Taiwan sovereignty. The tensions between China, Taiwan, and the US now becoming closer to Taiwan rattled the Asian market overnight, and you saw some of that carry over to the US markets. And building on the tension between the US and China, here is an update on the TikTok saga that is becoming insane by the hour. We had news, of course, from ByteDance, the owner of TikTok, the Chinese owner of TikTok, saying that no algorithms will be sold or controlled by Oracle. Oracle responded saying ByteDance will have no ownership whatsoever in the new deal structure. And of course, Trump made an interview in the morning and said that if Oracle and Walmart don't take full control of the company, we have no deal. China issued a response, of course, via their mouthpiece from the Global Times, and basically said that China is not going to take any humiliation and just stand on the side and watch. China will oppose the deal. Of course, this is getting insane and out of control. And here is my take. What the hell does TikTok has that the 2 largest nations in the world are fighting over it? And taking a foreign company in the US, breaking it down, and handing it to US firms, Oracle and Walmart in this case, is the kind of action you see in rogue regimes, not a civilized country with democracy and a rule of law. You can't just break a company, hand it to local firms, and then ask on top of that that they will pay $5 billion for an education fund and call that a deal. This is getting very muddy. And of course, why are Oracle and Walmart interested in this? They have no business in the social media platforms whatsoever. But we know that Larry Ellison of Oracle is a big donor to Trump. I don't know if the Waltons are behind Trump too. I assume they are. And of course, if the deal goes through, they're getting a piece of a business that is worth billions of dollars for free. Imagine if China issues a decree overnight saying that all Apple operations in China will be now handed over to Huawei. And on top of that, Apple will have to donate $10 billion to school and educate Chinese kids. That would be a crime. We would be over our heads about it, but we're doing it now. It is insanity, and this story will get crazier and crazier by the day. Someday we will find out what TikTok has, the treasure trove of TikTok. And moving on to the Nikola saga. Overnight, of course, we've heard that con artist and Nikola chairman Trevor Milton is out. He's gone, he's ousted. He resigned from the company. And of course, shares of Nikola were down as much as 30% pre-market. The con man, of course, issued a statement apologizing to Nikola shareholders and employees, calling them family, and calling himself their greatest fan. This is like an abusive boyfriend who beat his girlfriend up, sending her to the hospital, and then sending a letter from jail saying I love you. Trevor Milton is a psychopath. Shut up and go away. You've destroyed the reputation of the company. You've betrayed the young investors who believed in your company. You've betrayed your engineers and your employees. And of course, the son of a bitch gets to walk away with billions of dollars after resigning. He should be in handcuffs being led to jail, not getting rewarded billions of bucks. But this is America. We reward criminals and fraudsters. All they have to do is resign and apologize, and they get to walk away with millions, in this case billions of dollars, leaving investors and stakeholders holding the bag. And of course, moving on, we had some news overnight from Europe. And of course, you saw the banking sector getting whacked today significantly due to the FinCEN revelations. The FinCEN revelations uncovered a global banking scheme of money laundering for very shady organizations. The banks implied in this revelation are HSBC, JP Morgan, Deutsche Bank, Standard Chartered, Barclays, among others. It is a series of over 2,000 reports of misconduct or money laundering schemes, varying from pyramid schemes to drug cartels to mobsters. Imagine that, JP Morgan washed money for mobsters, to Russian oligarchs and government entities from Iran who are trying to avoid sanctions, to flat-out terrorist organizations. This is your beloved banking industry. Moving on to some news from Propaganda Minister Larry Kudlow. You are of course aware of the amount of coke that Larry Kudlow did back in the 70s and 80s, and the amount of Jack Daniels that Larry Kudlow continues to chug. The propaganda minister basically came out today saying that here in the US, we've pretty much defeated COVID and have it under total control, and that the economy is in quote-unquote self-sustaining V-shaped recovery. I will let the propaganda minister speak for himself.
I do think, however, there are some worries that Britain might shut down. It's coming out of London. I can't verify, it's not my job, but I read the reports like everybody else, and I think that's a great concern. The USA is in a much better position, thankfully. We've regained control of the virus, both the cases and the fatalities.
And since Larry believes in this V-shaped recovery, what do you say about the reports that U.S. households' expectations are rolling over? Financial and job security expectations. What do you say about the rapid decline of credit availability to U.S. households? We are reaching almost 2009 levels, meaning the U.S. households have no money left. But of course, the amount of coke and jack that propaganda minister Kudlow did erases some brain cells and causes Kudlow to live in a parallel universe where the COVID crisis is gone and the economy is in V-shaped recovery and everybody has jobs and wages are going up and there are no lines in food banks. What a disgrace this guy is. Moving on to the heat map analysis. As you can see today, the market was stumbling all over the place in the beginning. Tech was down, stay at home were down, airlines, casinos, hotels, cyclicals, everything was down. It was a sea of red. And I released this tweet saying that the market is trying to find a footing. The overall theme, of course, was taking a hint from Europe, that the COVID cases are skyrocketing and Europe are pretty much experiencing a second wave. The market, of course, could give a rat's ass about COVID or how many people die. The market doesn't care. The market cares if there is a second round of shutdowns or lockdowns, specifically in the United Kingdom. And finally, of course, you saw the market finding a footing and deciding to go with the good old stay-at-home / momentum / technology trade. And you saw, of course, Apple closing in the green, Netflix closing in the green, PayPal, so did Zoom, so did Costco, so did Nvidia, so did Peloton. And what closed in the red, airlines, hotels, casinos, cruises, all the rotation names that we've been talking about the last few weeks. They get a nice whack on the head. And of course, the gamblers and the Robin Hoodiots took the hint, the green light, to go Naruto style and stampede on buying Apple and Zoom, because this is what they're wired to understand. COVID fears rise equals buy Apple, buy Zoom, buy Peloton, buy Netflix, and when COVID fears subside, still buy Apple, buy Zoom, buy Peloton, buy Netflix, until of course you lose all your money. I will discuss in the chart analysis whether the bounce we've seen from the the momentum stay-at-home sector is sustainable or not. But for now, switching to the rotation trade, immediately you see it is a sea of red in the comeback stocks. All of them got whacked today. And of course, if you watch the last video, I protected myself. I bought puts on Marriott and another name I had, Freeport McMoRan. You don't see it in this list because it is not a comeback stock per se. But this is what I did today. Are you ready for it? I actually sold puts on a lot of the names in the comeback sectors, specifically the ones that I own, and some of the names that I actually don't own, specifically Southwest. I sold a put option assuming a decline of over 10% in Southwest. We got about 8% today. Why am I doing this? Number one, buying puts is to protect myself from the downside in some of the names in my portfolio. I did that with Marriott and Freeport. But today I was shopping for put options for names like Disney, Chevron, Emerson, among others. And they were very, very expensive. So my strategy was sell put options instead. We make money from them. And if these names decline to the levels where I sold the puts, if we see a bounce, I will add to my position. I will exercise the put option and I will buy shares in these names. Because here's what's going to happen. The decline in the comeback names is an opportunity to buy, but you got to give it a few days to take its course. Remember, we've been saying nibble on these names in anticipation of a day like today, but the long-term strategy remains that the comeback names will outperform technology and the stay-at-home stocks. Because as the pressure increases on the government, you will see stimulus deals specifically for the airline sector happening in a bipartisan way. Remember, the airlines are holding the government by the balls, blackmailing the government. If they don't give us another bailout, we will fire and lay off thousands and thousands of employees. And what do you know? Breaking news after the market, senators are now introducing a new bill for an airline bailout. Furthermore, if we get any good news, read the vaccine. And we know the vaccine headlines appear mysteriously before the market opens to prop up these names. You will see the rotation back on the table. Meanwhile, on the other side of the aisle, you will see a lot of morons who will be seduced by the move in the tech sector today, assuming that we found the bottom and the skies are clear, until of course they hit the same wall of worry that we've been dealing with the last few weeks. Tech is overcrowded and overvalued. That doesn't mean that we're not going to see a short-term bounce in tech. That would be an opportunity to short, and the decline in the comeback names would be an opportunity to buy and accumulate. This is at least the way I see it for now. And by the way, why did Facebook and Google close in the red? A piece of the puzzle, it is on the table. Moving on to the charts analysis of the day, starting with the SPY, the S&P 500. Here is a 15 minutes chart. As you can see, we caught support from the level of 333, around that number, as we've identified before. You saw the double bottom formation and the SPY rallied thereafter. Looking at the big picture from a daily perspective, the SPY made a hammer look, which is very bullish, indicating further upside tomorrow. That is one side of the coin. The other side, of course, is this is just a mini rebound in a macro, bigger trend to the downside, and we will resume the selling very soon. We have seen that look before, the hammer look during the COVID correction, and the following day, of course, the market started to collapse again. Therefore, if you're playing macro, the big picture, you are disciplined and restrained and you know exactly what's going on. If you're going to play the micro theme up and down every day, you will get smoked. You will be shaken out of the market because you're not going to be able to get it right all the time. Switching to the triple Qs, the Nasdaq 15 minutes chart. We have closed the gap, as you can see, closing above it. That is very bullish for the Qs, indicating further upside tomorrow. Looking at the big picture, where is the limit or the resistance that we will face, assuming of course that this bounce continues? That would be of course the trend line. And here is my projection. If the bounce continues, we will rally all the way to the trend line, get rejected from it, and then we resume the selling to the downside. Because nothing has changed technical wise, it is still negative from a weekly perspective, and nothing has changed regarding the overcrowding and overvaluation of these tech names. Nothing changed. Remember back in the correction of the COVID crisis, we have rebounded about 10% in the Qs, and then we resumed the slide and the waterfall decline to the southern destination. What says that we're not going to have at least a 5% bounce all the way to the trend line in the Qs before getting rejected and continuing the main trend to the downside? Very rational, very reasonable to have at least a 5% rebound from here. Yet here is your proof that this is a dead cat bounce. The dollar index. We talked yesterday about the dollar index. This is a weekly chart, by the way. We talked about the crossing of the MACD being very bullish and that we will see a short-term rally in the dollar index. Overnight, the dollar declined. I wasn't fazed by that because I knew what's going to happen next in the dollar. What do you know? Big green day in the dollar index. And as the Nasdaq started to recover and bounce higher, the dollar did not budge, as if it looks that the dollar will continue to march to the upside, indicating that the rush to raise cash and buy bonds is just starting and it will intensify, and the rush to buy technology names in the Nasdaq is just temporary for amateur traders who are thinking that the correction is over for now and the skies are clear. Some, of course, are covering their shorts, and some traders are day traders. They're playing the rebound and they know where the target is. But of course, mixed with these traders are the Robin Hoodiots who will go Naruto style, heads first, buying tech stocks again. Lastly, let's look at the VIX chart from a daily perspective. The VIX closing up about 7.5%. It was much higher today, but of course as the indices recovered, the VIX gave up a lot of its gains. The way I see the VIX playing right now, if we go down to the support line, we will see another bounce and another build for a run higher. So if you bought the VIX on Friday or you had options specifically on the UVXY, the most dangerous way to trade the VIX, you should have closed these today. But I don't see that the VIX is done yet. However, the UVXY and options on the UVXY will decline significantly if the VIX trends lower in the next few days as the Nasdaq and the SPY rebound to their resistance targets. And now let's move on to conclude the video. COVID has entered the chat again, and when COVID enters the chat, we as human beings, traders, and some algos revert back to what's been working under the COVID lockdown environment, the stay-at-home names. Buying Zoom, buying Peloton, buying Netflix, buying Apple, and of course asking questions later. When these questions are asked, finally, the answer would be, remember why these names were sold in the first place? Because they were overvalued and overcrowded, meaning that we cannot push them higher again. Even if COVID is making a second wave and a comeback in Europe. So what do we do now? Technology is no good. It's only good for a bounce. The cyclical stocks and the reopening stocks are no good due to the surge of Corona. So what do we do now? And the answer is there is nowhere to hide. This cute yo-yo game of flipping from one sector to the other, avoiding an overall crash in the market, will not last for longer. Sooner or later, we're gonna have to face the inevitable, that we need to bring back the market to fair and rational valuations. And therefore, hiding in tech will not last for long. Hiding in the reopening stocks will come with a lot of pain until the vaccine is announced. And you will see, of course, market participants coming to the usual conclusion of market corrections. Tina is a stupid argument. In the short term, there is an alternative, and that alternative is taking your profits, sitting on cash, waiting for a better entry price, and perhaps buying gold or buying bonds in the short term. This will happen. It is inevitable, and the cute games of hiding in one sector to avoid one storm, either it is the overvaluation storm, the correction in the tech sector, we go and hide in the airlines, and then when a COVID storm hits, we go back to hiding in Apple and Zoom, back and forth, back and forth. This game is temporary, and it is a matter of time before the correction resumes. The market has a destination in mind. You could delay it, you could play games with it, you could sprinkle a little Fed on it. At the end of the day, the market will head to the destination it always intended to visit.
If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.